Hey guys, welcome back to the channel. So in this video, we'll provide an update on my InvestEngine stocks and shares portfolio, a portfolio for which I have a goal to reach 100k in the next 3 years. This month has been crazy for the stock market. US CPI inflation fell from 3.4% to 3.3%, and the US stock market reacted positively with the S&P 500 hitting record highs. The S&P was up by 3.74% overall over the last month. And one stock in the US has particularly hit the headlines, and that's Nvidia. Nvidia's had an incredible month, up by 21.94%, which led it overtaking Microsoft to become the most valuable company in the world. It's since fallen down to second position at the time of recording, but it's still had an amazing month. If we look closer to home in the UK, inflation data in the UK was extremely positive, as CPI inflation reached the Bank of England's target level of 2% for the first time in nearly 3 years. However, this didn't translate into good stock market performance, as the FTSE 100 had a bad month and was down by 1.22%. So overall, it's been a bad month for the UK stock market, but a very good month for the US stock market. Now we know this, let's see how the markets have impacted my own InvestEngine portfolio. But before we do that, if you're new here, I'm Alex, a management consultant by day, and on this channel we like to discuss all things personal finance with particular focus on how to grow your money. If you'd like to follow my own personal finance journey with regular portfolio updates like this one, as well as a bunch of other personal finance related videos, then I greatly appreciate subscribe. And for this video, let's get into it by bringing up InvestEngine's app. We can see that my portfolio is up by £247.65 over the last month in pound terms and 0.66% in percentage terms. If we use the graph here, we can see that I started the month with a portfolio value of £25,109, and that portfolio value slowly crept up over the month, leading to a balance at the time of recording of £26,857. So my portfolio has increased in value over the last month by £1,748. Of that, £1,500 came from my monthly deposit. You can see the deposit with a spike around the 25th of May here. Then the remaining £248 of that increase over the last month came from an increase in value of the investments. So overall, it's been a good month for my portfolio. I'm in the green. If we zoom out to see the portfolio performance since I started it using the Max tab here, we can see that overall I'm up by £2,425 in pound terms and just over 17% in percentage terms. With this portfolio, I'm extremely long-term focused. I plan on investing £1,500 every month in this portfolio for the next 15 years. So I'm still very early on in my journey here, as I only started this portfolio around 2 years ago, and I've still got a long time frame before I even consider taking money out. And the reason I've got this time frame of around 15 years is to try and exploit the compound effect. And we can actually use InvestEngine's regular investing calculator to see what my portfolio could look like in 15 years. I simply enter the current portfolio balance under initial investment, which is £26,857. I enter my monthly investment, which is £1,500, investment period, which is 15 years. Then I need to input the potential return I expect from this portfolio. InvestEngine provide the historical average returns of the MSCI World, S&P 500 and money market funds to give you an indicator on potential performance. However, I'm going to enter my own return figure. I'm going to enter 10% as I expect this over the next 15 years. We can see, based on these predictions, my portfolio will be worth £714,622 in 15 years' time, with £417,765 of that coming from an increase in value, showing the true power of the compound effect. I'll put a link in the description if you fancy using this calculator to find out what your portfolio could be worth in the long term. For me personally, to achieve my own plan, I use InvestEngine's automation features, and the number one feature I use is their savings plan feature. This enables me to automate my monthly payments from my bank account to InvestEngine into my investments at my chosen weights. So it makes it super easy for me to try and execute my own plan. And InvestEngine currently have a competition open for those who have yet to enable savings plans. Anyone who sets up a savings plan by the end of July with InvestEngine will be entered into a competition for the chance to win a prize of £1,000. And if you're new to InvestEngine, they still have a great sign-up offer where you can get a bonus of up to £50 when you invest at least £100 with InvestEngine, subject to meeting terms and conditions, of course. All the links to these offers can be found in the description. But coming back to this portfolio update, now we know the overall return of the portfolio, let's look into the return of the individual ETFs within it. And let's start off, as always, by taking a look at the largest ETF within my portfolio, which is the HSBC MSCI World. This ETF was up by 2.06% over the last month in percentage terms, and over £376 in pound terms. And it's not surprising that this ETF did well over the last month, as most of this ETF is exposed to US equities, and as we spoke about at the start of the video, the US had a very good month for their stock market. The next ETF is also in the green. It's the iShares MSCI Emerging Markets. It was up by 0.061% in percentage terms and over £26 in pound terms. So the first two ETFs in my portfolio had a good month. However, the remaining ETFs didn't do as well. In fact, they were all negative. The iShares MSCI World Small Cap was negative and down by 2.47% in percentage terms and over £43 in pound terms. The iShares Physical Gold was down by 1.85% in percentage terms and 95p in pound terms, so marginal. And then the final ETF was the worst performing ETF this month. It's the Wisdom Tree Cloud Computing ETF, and it was down by 9.04% in percentage terms and over £111 in pound terms. So an awful month for this cloud computing fund. However, when I bought this fund and when I continue to buy it, I expect volatility, as it's the least diversified of my equity ETFs. It's only invested in one sector, and it's invested in less companies compared to the other equity ETFs. So of course it's going to have bigger swings upwards and downwards. It's just unfortunate at the moment it's in a downward swing, so hopefully the next time it has a big swing, hopefully it's upwards. And I'm going to continue investing in it as I still believe in this sector. So overall, 3 out of the 5 ETFs in my portfolio were in the red, but fortunately the 2 which were in the green outweighed the negative performance of those in the red. So overall, I'm up this month and it's been a good month for my portfolio. Let me know how your portfolios have been performing, and if you fancy finding out why I don't invest in an S&P 500 fund and instead invest in the funds which you've seen today, I have a video around here. Thanks for watching.